Welcome back to the channel, everyone. Manny B Investing. Make sure you hit that like on the way in, follow us on Twitter, and make sure you hit that subscribe button and check out the description for the links to our social. Across the broad, crypto has experienced large declines, but we move forward with more knowledge than ever. In this article, we discuss how TVL, or total value locked, doesn't tell the full story, how markets can be manipulated, and red flags in crypto. Let's go ahead and take a look at the latest Paribus blog post. The measurement of success. There are lies, damned lies, and statistics. This phrase was popularized by Mark Twain 115 years ago and is still relevant today, especially when applied to doing your own research on cryptocurrencies. While we're less than halfway through 2022, it's already proving to be the most tumultuous year for the crypto space. One statistic that often used as a benchmark for success in DeFi is TVL, or total value locked. But as the events of this week have shown, it can be manipulated to create a false sense of security. Just over 1 week ago, on May 4th, Anchor Protocol had a TVL of close to $20 billion, which it gained in large part by attracting institutional and retail investors to stake USDT stablecoins in return for a 20% yield. It's been claimed by many crypto experts that this led to the rapid rise of the USDT beyond a scale that could effectively be managed during Black Swan events. Very interesting. During an interview with Bloomberg in April, the infamous Sam Bankman-Fried said Luna and USDT, they can serve some useful purposes, but if you do zoom out and you say this is a stablecoin backed by a volatile assets, what's going to happen in the big market move? You know how this plays out. The result this week breaks down in USDT and Luna is only just the beginning to be felt in causing systemic risk across the whole blockchain space, while simultaneously attracting the ire of regulators. For those who use TVL as a key statistic in the risk management strategy for Luna and USD, they're left counting the cost of their continued losses. In general, TVL indicates the level of interest and engagement with a platform or protocol, and the best way to interpret it isn't to look at the headline figure, but rather to examine the reasons for its growth. Those who saw the rapid rise of TVL and Anchor were warned that the rise was too rapid and not organic, driven by unsustainable yields. Tether stablecoin USDT, on the other hand, has shown a slower, more natural growth rate and has widespread utility. However, now there's blood in the water. USDT is also coming under increased pressure and has begun to depeg slightly from the dollar. Cardano is reported to have around 110 million of TVL, which is often used by lazy reporters to question why its market cap is so high. The low level of TVL is due to this strange quirk that doesn't count delegated ADA as locked because you can unstake it whenever you want. If staked ADA is included, the TVL for Cardano is around 11.5 billion at the current prices, which is pretty low right now. This equates to just under 72% of the total circulating supply. As well as looking at the levels of TVL and its growth rate, it needs to be considered in the context of utility. For example, Paribus native staking program main utility is to reward our early supporters whilst we wait for the release of the MVP and the ability to add further functionality to the PBX token. This is why our present staking program is one-off and future staking aspects will be different. So that answers that question. I've seen that question a lot. Will staking continue? It will, but not in that way. Cardano's staking program is essential for securing the base layer blockchain as it's built on a proof of stake or POS model rather than proof of work model like Bitcoin. In order to confirm transactions and maintain the integrity of the chain, Cardano requires a certain amount of its native token to be staked within delegation pools that can then resolve blocks on the chain. Anchor, on the other hand, had very limited utility. The main purpose of staking UST on Anchor was to gain a 20% yield, and it was widely promoted throughout the crypto media and influencers as a volatile, resistant way to earn high returns. As such, it gained immediate traction with large-scale DeFi investors without necessarily having the ability to withstand a sustained failure. The problem for Anchor and the whole Luna ecosystem is that when UST finally restores its peg to the US dollar, there will be up to $14 billion seeking exit liquidity into Luna, which currently has a market cap of $190 million. This means that Luna will most likely be minted in vast quantities to allow for the necessary liquidity, which will further devalue it. In this instance, Anchor and USD TVL will most likely cause many more problems over the next few weeks. Overall, then TVL can be considered a useful metric when researching which projects to support, but as a headline statistic, it can be quite easily manipulated. Added to it, a constantly moving target that increases and decreases as volatility ripples through the market. It's for those reasons we use TVL as just one small measure of the DeFi landscape. We choose to focus on building a robust, high-quality product that will develop naturally and transparently in the same way we focus on organic growth in the building of Paribus community, as these are the best measurements for long-term success. So great blog posting talking about the failures of Luna, getting a little deeper than the surface, talking about why they believe it failed. TVL, again, I use that as a measurement of interest. I don't use it as a measurement of success because TVL can change from hour to hour, day to day, week to week. That's just how it is. TVL is just the amount of attention it measured in the amount of money flowing into a protocol or a platform. That's all it is. It just tells you who's using what. But yeah, you want to have more TVL. You want to have a lot of TVL because that kind of gives you an indicator. Again, it's just an indicator. It's not a hard statistic. It doesn't mean something's better than the other. It just means that's where the sentiment is in the form of dollars. So remember, TVL is important, but it's not everything. And this was measurement of success, the blog posting from Paribus from May 13th. And make sure you hit that like, hit that subscribe, and we'll see you on the next one. Peace.